The Federal Reserve prepares for another major event, a chance to make an easy monetary policy even easier. Many want to see a 50 basis point cut, which would be considered extraordinary, but these days anything is possible. The goal is ultimately to get the rates to come down to 0% as fast as possible. All central banks are doing this, so it is considered reasonable and appropriate. They seem to have forgotten something. What about the massive devaluation of their currencies, which affects the vast majority of the population? You came here for the truth, so let me unveil that for you. We always have the Federal Reserve coming online telling everybody that inflation is low. We could see inflation in every corner of the economy and of all of the markets, and yet as long as that core PCE inflation rate that they use remains below 2%, they will say there is no concern. We have had several people from the Federal Reserve talk about how they should do away with the target of this inflation rate, trying to keep it within that 2 and essentially allow it to go higher. They would use this at a time in which they're not necessarily concerned about inflation, but instead worried about job growth and an economy and so on. This would have to come in the next crisis. So we will see this happening. We will see massive quantitative easing. There's no doubt about it. We are already beginning a new quantitative easing cycle. We can see that in July, they decided that they were going to cut rates, even though they said, quote, modest pace for growth. And now September, we could be seeing the exact same thing. I'm going to show you something here today that many people are not aware of. The mainstream media did not cover this issue. I'm going to quote from it here. I'm going to talk about the Federal Reserve. I'm going to talk about the financial markets. Then I want to get into what's happening with real economic indicators. There's so much in this video. Let's begin. Larry Kudlow says phone call earlier this week with China on trade went very well. Again, we get this all the time. No matter how many phone calls they make, no matter how many meetings there are, they always went well. That's what they say. They will always use this "they went well" excuse in order to keep everything stable and steady. They're never going to tell you that it didn't go well. And so the market is going to pick up this information. We have computer algorithms. They know the drill. By sending a message like this, you can push the markets up just a little bit higher. The disappointing jobs report would have been much worse without newly hired census workers. Even though this information came out, it really doesn't matter because the information that people will get is that the jobs numbers are still positive. It doesn't matter what detail is contained within the report. As long as they are reasonable, the market is going to like it. Look, the market didn't go down. The market went up as a result of this. They don't care anymore. That information is finished. If you find out that in fact it wasn't so good because it was largely due to census workers, that's temporary workers, government workers, that means more money coming out of the government, coming out of your tax dollars and going to fund these temporary workers. A lot of people are working temp jobs these days. Many people working 2 and 3 jobs just to be able to support their life. Job growth slowed down. You can see what has happened very, very clearly over the last while. This is just showing us from 2018 into August 2019, and it is clear that there is a slowdown that is happening right now that is going on in virtually all sectors. It's not necessarily one or the other, but we're definitely seeing things that are happening today that had not been happening, let's say, in 2017. I'm going to show you a chart that basically gives you a breakdown here, but essentially all I'm trying to show you is that they make things seem really good, but if you're willing to go down one level deeper, you will understand more of the truth. Here you can see on this 34,000 is government, and at the very bottom it just shows you that part of the 2020 census was hiring a whole bunch of people. These are temp workers. That's not a good thing for the economy, maybe temporarily, but ultimately this is going to run out and then they're going to look for work again. Here you can see that manufacturing had only 3,000 jobs. We know what's happening with manufacturing. It is staying overseas. Doesn't look to be coming back onto US shores anytime soon. I just did a video prior to this talking about how if you look at the most popular jobs today, the ones that are seeing the biggest growth are those that are making $24,000 a year. That is not strength. That is not a good sign, but of course most people don't know what's going on. Okay, so this right here is just a lead into the Federal Reserve and what they have been talking about. Jerome Powell went to Switzerland. He was on stage with a moderator and somebody from the Swiss National Bank. By the time I tuned in to watch it, the event had already started, so I didn't exactly see who the other individual was, but regardless, the quotes here are coming from two high-level people within central banks around the world, one from the Fed, one from the Swiss National Bank, and I thought it was incredible, absolutely incredible to hear Jerome Powell say, and I quote, "We are not part of the government." And he was speaking specifically of the Federal Reserve. We are not part of the government. And this tells you yet another sign, yet another indicator that this institution sits outside of the government structure. You can watch that for yourself if you're interested. It's a little long, it's a little boring, but I'm just giving you the details that you need to know. Just imagine for a second, we've been talking about the fact that the Federal Reserve is another entity separate from the government, and yet you get these people coming in all the time and they speak as if this is the saving grace for everybody, that everybody must bow down to the Federal Reserve because they make the sun come up in the morning. Understand the truth even when it's coming out of Jerome Powell's own mouth. My goodness, they are going to decrease interest rates yet again in September, according to this information that has come out. This, of course, is quite dangerous, and I am worried about the implications of this because we have less and less and less room to move down. They're going to have to go right to the floor, and then it will only be a matter of time before they bring it into the negative. But just as the moderator finished off his statements at the very end of this speech, he said something that should piss off a lot of people. Referring to Jerome Powell, he said, "In you we trust." He wasn't talking about Powell himself, but speaking of the central banks. This tells you where people's faith is today. Now you tell me on any other mainstream or alternative resource out there where these two quotes coming from, where you have seen anybody else talk about these two important quotes. Nobody's covering this data. Fed Reserve Chairman Jerome Powell said Friday that ongoing trade issues between China and the US is weighing down companies' investment decisions. "I think it is the case that uncertainty around trade policy is causing some companies to hold back now on investment. We've been hearing quite a bit about uncertainty, so for businesses to particularly make longer-term investments in plants or equipment or software, they want some certainty that the demand will be there. And ultimately what they want is more interest rate reductions. That's all they can do. That's all the Federal Reserve can do. They can print money, and they can make it real easy to borrow. They're looking for more interest rate cuts right now. At this time, the market is pricing it in, and they want 50 basis points from this place where they are right now. I think that is a dangerous policy, and I don't know if they're going to get it. It looks like 25 basis points is really what they want, but if they get 25 basis points in September, you know they're going to be begging and pleading for it to happen in a couple months down the road. New York Fed recession odds are now the highest they have been since the financial crisis. This continues to creep up. And if you're thinking to yourself, 38, it doesn't really seem like that much. It's higher than back in the early 90s. It is nearly where it was back in 2008 and not far off from the year 2000. This tells you that they're not ever going to make it 100%. It's not the way it works, but this is slowly but surely inching up its way to the point at which they have to admit it's a recession. Now, if we go around the world to China, you will see what they have done. This is a translated article directly from the People's Bank of China's own website. The triple R cuts support the development of the real economy. That's right. If you cut the reserve requirements for all of the financial institutions, they could loan out more money to people who shouldn't have got it in the first place. That will increase the lending, which increases the borrowing, which increases the spending, and everything is gonna be just fine. That's right. So it was just over $100 billion worth here, and that just shows you that they are willing to increase liquidity over and over and over again. They are doing this on all levels. Direct injection from the People's Bank of China. They are doing so by reducing the reserve requirement ratios consistently. They've been doing this for a while, in fact. You're watching the public works projects that are taking place. We are seeing it on all levels in China, and this continues to be an issue, but nobody sees it that way. This is just showing you how they've been decreasing that over time, loosening the lending standards in order to try and get the economy moving. Now I want to flip the page here. We are looking at all of this data, what the Fed is doing, looking at stocks, looking at bonds. Well, look at the actual real indicators like the shipping industry. Maersk and MSC to suspend AE to Asia North Europe loop for the second time. This is the second consecutive year where they stopped this. Now, why? Why would they do that if there was all kinds of shipments happening, if we were doing well? This is not necessarily because of one particular country. We are seeing a slowdown that's going on, and it's not just because of what's going on with the US and China. People need to understand that. So look what happened the last time around. It was the fourth quarter of 2018, and could this be a repeating process for what happened 1 year ago? This chart here is the MSCI World Stocks. Could be completely unrelated, but it certainly does ring a bell. China to EU 40-foot shipping container rate. Now you can see that they're just showing you, number one, in my opinion, it is volatile, but at the same time, the trend line is down. We'll see where it goes here because it can certainly pick up as we head into the fourth quarter. Global 40-foot shipping container rate. This has certainly been coming down over the last year. That is very clear to me here. World trade volume since the financial crisis has been climbing up very consistently. However, in the last couple years, we have seen a dramatic change. It has been very stagnant at a time in which we are being told everything is okay, we just need to reduce interest rates, we just need to do this and that. Well, they can make any excuse they want to. Quite frankly, I'm not buying it. And to finish off the video, I just wanted to talk about this. The CIO of Blackrock wrote this article, and he's talking about all of the intervention that the central banks are doing. And he actually admitted right here that everything that they are enacting today is something that they will be very hard pressed to roll back. Coming back from these extreme policies is very difficult, particularly as the aging demographic and concurrent potential growth trends embedded in the system provide a ceiling on above-trend growth, which otherwise could aid the economy in a soft landing from these policies. All of this leads one today to consider assets that can participate in an inherent devaluation of the local currency, which is to say equities, real estate, and even hard assets that have historic value relative, such as gold. Basically what he's saying here, they're reducing interest rates, they're printing money, they're going full steam at this, and so you want to hold on to real assets. He mentioned, I believe it was this article here, specifically saying you don't want to own sovereign bonds, they're extremely dangerous. Yet where is the money going right now? We're watching all of that capital flowing into negative rate bonds. It's insane, but that's the real deal. I'm going to end the video there. If you found it informative, hit that thumbs up button. Remember, where do you see the type of quotes that I gave you today? Nowhere else. Nobody's talking about it, but that's why you come here. If you want to make money, if you want to develop a passive income business, I have the Amazon GPS. It is a strategy for you to learn step by step how to do it for free. Okay, this is a free e-course. All you got to do is click on the link below. It will take you to the website. You could sign up at theamazongps.com. If you want the financial education that you were not taught in school, that was kept from the school system intentionally to keep you ignorant, well then, these 2 books have everything you need. All the details are located at the link in the description if you want the audiobook that's available at themoneygps.com. Hang on a second, don't go anywhere. If you haven't watched this video, I highly recommend doing so. I break it down a lot further, so click on it and I will see you there.